You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Looks like we got a video glitch. There we go. There it is. Better late than never. Well, good afternoon. Welcome back. Today's Monday, 23rd day of September, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room that's reserved for members only and those taking our 1-week free trial. If you haven't taken the 1-week free trial, go to mytradingiq.com. At the very top of the page, there's a link. 5-day free trial, no credit card required. Click the purple button, fill out the registration form, hit submit. We'll get your indicators indicating today, get your desktop set up, and then your trial will officially start tomorrow. So that means you'll only get 4 days and not 5. Not true. You get 5 consecutive trading days, even if it stretches over a weekend or a holiday. So in most cases, it turns a 5-day free trial into a 7-day free trial. And you might say, well, what good are the indicators to me over the weekend? Well, number 1, you can get familiar with them, and number 2, there are markets that do trade over the weekend. So never worry about what day of the week or weekend or hour of the day you sign up for the trial. Once we have your desktop set up and once we have your indicators indicating, then the following day, that's when your trial starts and you get 5 consecutive trading days. When the live training room ends each day, we take a 30-minute break and come back for the afternoon broadcast, this broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. Our daily schedule, right here. Start with our devotional, a word of prayer, some news, global and market. Recap of the alerts, logic, and concierge. And then about 50 minutes in to the broadcast, Michael will join us, give us a recap of what happened this morning in the live training room. And then we'll do some live trading on the TradingView platform for about a half an hour. And then wrap things up with our good word for the day. So, we're beginning a new devotional topic this week. Sermon on the Mount, a blueprint for life. If you've ever read the Bible, chances are read the Sermon on the Mount, also known as the Beatitudes. So our scripture today, Matthew 5, verses 3 through 12. I'm going to share it with you from the Message translation. It may sound a little different than what you've read in the King James. the these and the thous have been removed. Plain English. Always remember, Jesus and the disciples, they did not speak in the King's English. The King's English had not been invented in the time of Jesus and the disciples. They used just the common speech of the day. Could be Hebrew, could be Greek, could be Aramaic. So, starting in verse 3, you're blessed when you're at the end of your rope. With less of you, there is more of God and His rule. You're blessed when you feel you've lost what is most dear to you. Only then can you be embraced by the one most dear to you. You're blessed when you're content with just who you are. No more, no less. That's the moment you find yourselves proud owners of everything that can be bought. You're blessed when you've worked up a good appetite for God. He's food and drink and the best meal you'll ever eat. You're blessed when you care. At the moment of being careful, you find yourself cared for. You're blessed when you get your inside world, your mind and heart put right. Then you can see God in the outside world. You're blessed when you can show people how to cooperate instead of compete or fight. That's when you discover who you really are and your place in God's family. You're blessed when your commitment to God provokes persecution. Persecution drives you even deeper into God's kingdom. Not only that, count yourselves blessed. Every time people put you down or throw you out or speak lies about you, to discredit me, this is Jesus speaking. What it means is that the truth is too close for comfort, and they are uncomfortable. You can be glad when that happens. Give a cheer even. For though they don't like it, I do. And all heaven applauds. And know that you are in good company. My prophets and witnesses have always gotten into this kind of trouble. So there you have part of the Sermon on the Mount, and we'll be on this topic all week, right up through Friday. Now again, that was Matthew 5, verses 3 through 12. Blessed are the poor in spirit, for theirs is the kingdom of heaven. What does Jesus mean when he talks about blessings? We just talked about a lot of blessings. Well, the word blessed in Greek is makarios, and it's difficult to translate into English. Many translators use the word blessed or happy, as this was the closest to the meaning they could get. There is an eternal joy on the inside that the world cannot give you. This means no matter what happens in my day, I have a joy that cannot be taken away. These Beatitudes are an invitation into a completely countercultural value system that no circumstances or happening can take our joy away. It's by living with these new instructions that Jesus gives that he is inviting us to live a truly flourishing life. First group that Jesus says is blessed are the poor in spirit. What does he mean to be poor in spirit? In verse 3, The word that is used in the original New Testament Greek is a word that means poverty, to cower, to cringe like a beggar. In classical Greek usage, it was used the same way as someone who crouches, who bends, who wretchedly begs for money or for worth. And if you take this meaning of the word and you combine it with in spirit, poverty in spirit, what it is saying is those who are poor in spirit are those who are blessed, are those who will have the kingdom of heaven. You could translate it like this: blessed are those who are so desperately poor in their spiritual resources that they realize that they must have help from outside sources. Theirs is the kingdom of heaven. Join me in a word of prayer. Heavenly Father, we thank you for the blessings that you pour upon us as revealed in Matthew 5. You call us to be humble, merciful, pure in heart, and peacemakers. Help us, Lord, to live according to these beatitudes, reflecting your love and grace in all we do. May we find comfort and strength in your promises, especially in times of hardship and trial. And Lord, as the upcoming elections approach here in America, we ask for your guidance and wisdom. Lead us as a nation to seek righteousness, justice, and peace. Help us to remember that true blessing comes from walking in your ways. We pray for unity, discernment, and healing across the land, and that most of all, your will be done. It's in Jesus' name, believe and pray. And everybody said, amen. Amen, and happy Monday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 3 points. The NASDAQ is up 18. S&P 500's up 9.5. The Russell 2000 is down 7.5. So some pretty quiet, pretty narrow trade, and we do have mixed markets at the moment. As futures traders, we like to see the 4 major indices the same color. We don't care if it's green or red, because we can trade in either direction. Long, short, long again, if that's what the chart in front of us tells us to do as futures traders. It's a little more complicated with stocks, but futures, not an issue. One of the things we really like. So today we have the dreaded mixed markets, but again, none of them in either direction are very deep. The biggest move is the NASDAQ, which is up a whopping 20 points. In the commodity basket, crude oil down 92 cents. Trading 70.07 last. That's a drop of over 1.25%. Gold up $7.30. trading 26.53.50 last. Silver down 46 cents, trading 31.04 last. That's a drop of almost 1.5%, or almost $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 568 points, 1.5%. The Shanghai rose 12. The Hang Seng dropped 11. And in the European markets at the close, FTSE up 29, the DAX up 126, the CAC up 7. Pretty quiet start to the week, with the exception of the Nikkei and crude oil. Those are the movers and shakers today. So let's see what's happening out in the world on this 23rd day of September. Who remembers 3 Mile Island? Most of you in this audience are probably old enough to remember. It was a Pennsylvania power plant, home to the worst nuclear accident in U.S. history. Well, they're getting ready to restart it by early 2028, according to reports. The lone undamaged reactor at 3 Mile Island plant will fuel the rapidly growing AI efforts by Microsoft, which signed a 20-year purchasing agreement with Constellation Energy. So Microsoft's going to have its own nuclear reactor. In 1979, I just got out of high school. The plant's second reactor suffered a partial nuclear meltdown after a coolant loop failed, causing the reactor core to overheat. No injuries or deaths were caused by the incident, though a small amount of radioactive gas and iodine was released into the atmosphere. No public health effects were identified, and the first reactor, the one to be restarted, continued to operate until 2019 before being shut down due to cost. Energy-intensive generative AI applications are expected to consume 1.5% of global electricity by 2029. French President Emmanuel Macron unveiled his new cabinet over the weekend, revealing an administration with a number of centrists and conservatives in key posts. The makeup marks a distinct shift towards the right for the center-left Macron, who is seeking to break through a political impasse following summer elections in which a left-wing alliance led in seats but failed to gain an outright majority. The news comes roughly 2 weeks after Macron appointed center-right lawmaker Michel Barnier. Notably, the lineup left out any representatives from the party of leading opposition figure Marine Le Pen, despite the group finishing with the second most parliamentary seats. France faces a number of domestic challenges, including a total federal debt load that stands at more than 3.3 trillion, or 110% of the country's gross domestic product, a violation of the European Union's guideline of 60%, and the EU's third highest behind Greece and Italy. Yeah, We dreamed of having $3 trillion in debt. We're over 35 now. Israel and Lebanon's Iran-backed Hezbollah exchanged hundreds of cross-border missile and rocket attacks Sunday, with leaders signaling the nearly year-long conflict has entered a new stage. The escalation in the conflict, initiated by Lebanon in October in support of Hamas in Gaza, comes after Israel is suspected of detonating thousands of mobile communication devices across Lebanon and launched a direct strike Friday in Beirut, killing 45 people, including a Hezbollah commander. In response, Hezbollah launched several direct hits in the coastal city of Haifa amid a barrage of 115 missiles. At least 4 projectiles were also intercepted from Iran-backed militias in Iraq. Israeli officials say the attacks will continue until Israelis can return to the border near Lebanon. Lebanon has claimed its attacks on Israel will stop once the war in Gaza ends. A scenario reports claim is less likely, before 2025. New reports also suggest Israel may soon deploy siege tactics in northern Gaza. I said all that to say this: it's probably going to get worse before it gets any better. Separately, Israeli troops shut down the news outlet Al Jazeera in the West Bank on Sunday. That's a big deal. Well, everybody's got that Fed Day hangover. The Federal Reserve's interest rate cut last week has given prospective homebuyers something to celebrate: lower borrowing costs. The half percentage point cut took rates off a 23-year high where they'd been for more than a year, and the central bank signaled that more cuts could be on the way. But while lower mortgage rates may translate into more buying power for homebuyers, America's housing market woes aren't likely to be solved solely by rate cuts. A shortage of homes for sale, combined with rising expenses like homeowners insurance and rent, have made the cost of both owning and renting a home in America increasingly unaffordable for many, taking an ever-growing share of Americans' paychecks and savings accounts. No question, this is good news, according to Sean Donovan, a former U.S. Secretary of Housing and Urban Development. But there's a lot more we have to do to solve an unprecedented housing crisis in this country. Both Vice President Kamala Harris and former President Donald Trump have proposed ways to increase the housing supply. But for good reason, there currently aren't enough homes for sale to keep up with demand. This is a chronic, slow-growing crisis over decades that became an acute crisis during COVID. The shortage of homes has helped propel home prices to record highs. According to the National Association of Realtors, the median existing home sales price was $416,000 in August, down slightly from the record high of $426,000 set in June. Harris has introduced a plan to build 3 million new homes, while Trump has said he plans to cut regulations that add costs to the home building process. But Enterprise Community Partners, the nonprofit where Donovan currently serves as CEO, estimates that the U.S. needs 7 million new units in order to stabilize the housing market. Well, at the end of the day, most middle-class working Americans simply can't afford to buy a house. Yeah, I know we took a 0.5 point off the interest rate. All I did was raise the price of the houses. Federal Reserve Bank of Chicago President Goolsbee said interest rates need to be lowered significantly to protect the U.S. labor market and support the U.S. economy. I mean, we got to find jobs for all of these newcomers. Is that the politically correct word? As we've gained confidence that we're on the path back to 2% inflation, it's appropriate to increase our focus on the other side of the Fed's mandate to think about risk to employment. That likely means many more rate cuts over the next year. Goolsbee cautioned that when labor markets deteriorate, they do so more quickly than central bankers can deliver relief through rate cuts. And there's just a ton of articles out there about how out of control the homeless problem is in America today. In fact, we went into that in some detail last week. President Biden, he figured it was time to come in off the beach and do something. So he wants to ban Chinese vehicles from driving on American highways. U.S. Commerce Department today proposed prohibiting key Chinese software and hardware in connected vehicles on American roads due to national security concerns, a move that would effectively ban nearly all Chinese cars from entering the U.S. market. The planned regulation, first reported by Reuters, would also force American and other major automakers in the coming years to remove key Chinese software and hardware from vehicles in the United States. Many Americans today are driving around in brand new vehicles, and they're bright and they're shiny and they got all kinds of technology. But somebody sitting behind a keyboard in China right now could roll that baby right off the road. That's not a conspiracy theory, that's just a fact. Is it too little too late? Yeah, it is. Sean Diddy Combs' vast music catalog has seen a jump in streams since his arrest last week and the unsealing of an indictment against him. We went into detail last week about the indictment. But what's interesting, this guy's in big trouble, okay? And word is he could take a lot of important people down. Remember, you heard it here first. Diddy did not kill himself. Okay? You heard it here first. Okay? But it's kind of like a car wreck, you know. Everybody slows down, and pretty soon you got this big traffic jam. They call it rubbernecking, you know. So now that this guy's in so much trouble, suddenly everybody wants to go listen to his music. Under his many musical monitors, including Diddy, Puff Daddy, and P. Diddy, the industry data and analytics company Illuminate said the mogul's music saw an average 18.3% increase in on-demand streams during the week of his arrest compared to the prior week. So, yes, he's behind bars, and yes, he's in danger of going to jail for a very, very long time, if he survives where he's at now. But he's still making bank. Gold rose to fresh all-time highs as traders digested data showing a moderation in U.S. business activity while awaiting a slew of key economic readings that may offer clues on the scope of further easing by the Federal Reserve. U.S. business activity expanded at a slightly slower pace in early September, while expectations deteriorated and a gauge of prices received climbed to a 6-month high. Bullion rose as much as 0.5% to a record $2,634.90 an ounce, beating the previous all-time high posted on Friday. Gold has advanced since the Fed lowered its benchmark interest rate by 0.5 percentage point last week, building on what was already a record-setting year. Precious metal. And that is the news. Logic 247. We're currently in week 321. Over the last 321 weeks, we've issued over 17,800 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Last week, which would have been week 320, we published 52 alerts. That's the whole week. 5 stop outs, which would be 13%. This week so far, now this was as of 6:30 a.m. this morning when Valerie did the recap, we issued a total of 12 alerts since the markets opened last night. Still waiting on the outcome of 2. 10 actionable alerts, of which 3 or 30% would have been stopped out based on that same market structure, that same simple process that we teach all of our passport holders. We seem to have a thing here lately of Mondays being a tough day. I think last Monday we started the week out around 30%. But by the end of the week, we got it down to 13%. So our average still holds. And make sure you use the logic alerts as they're intended to help you learn how to read the chart. Every logic alert has an entry price, an initial target, additional targets, and then a final trade to target. Now we teach you to get your goal for the day and put the mouse away. Okay. So why the need for the additional targets? Well, because once you get your goal for the day, the price of the market, whatever market you're trading, doesn't stop moving, it keeps moving. So if you use the logic alerts as they're intended, it will teach you how to read the chart. You'll know where to expect resistance. You'll know where to expect support. And those become targets. You can think of them as obstacles. You can think of them as targets. You'll be able to spot from the entry to the initial target. That's a window of opportunity. From that first target to the second target, that's another window of opportunity. From the second target to the third target, that's another window of opportunity. So if you'll show up and do the work and draw the horizontal lines, pretty soon you'll be able to look at a 30-minute chart and know with a great deal of certainty what the next high probability move is. You won't know with certainty what's going to happen next in the market. Nobody does. Nobody can. That would defy the laws of science, physics, even God. But what you can know is what the next high probability move is. As evidenced by the logic alerts, over 17,800 individual alerts. We've averaged 20% or less being stopped out. So there's the proof in the pudding that while you can't know with certainty what's going to happen next, no one can. There's just too many factors. But you can know with certainty what the next high probability move is. And after you do your best work, your best analysis, you're probably going to still get stopped out 20% of the time. And if you're looking for anything better than that, you're wasting time and wasting money, because you need to learn how to read the chart so you can learn how to trade. Long before we had Logic 247, we had the concierge trade alerts. Oh, they're a lot different. The logic alerts can come out anytime around the clock. 2 a.m., 2 p.m., futures trade around the clock, and we have traders around the globe. So their day session is our night session and vice versa. Stocks stop here in the U.S. at 4 p.m. Eastern. Futures stop at 5 p.m. Eastern. But then an hour later at 6 p.m. Eastern, they open again. Tonight at 6 p.m. Eastern, the markets will open, the Globex markets will open, and that will be the beginning of the Tuesday session, even though it's still Monday night here in the U.S. Now, the CTAs don't come out around the clock. They're published as a static report shortly after the Globex open each evening. So the markets opened last night. The Monday session began at 6 p.m. Eastern. All of these targets came out 25 minutes after the open. So all of our members, all of our trial members had all of these targets 25 minutes after the open. And if you're a member or trial member, make sure you read and understand all of this information up here. Okay? That helps you put everything in perspective. Now, let's go to the daily chart. What, another doji? My. Now, last night, I noted in the discussion group in Telegram, we had an inside day of an inside day. Friday, this candle was an inside day of Thursday. And it was real early in the session last night, so it would be expected that it would have an inside day at that point. We've now taken out the high of Friday, but not Thursday. And we have not taken out the low of Friday. The low of Friday is sitting right on top of the 50% fib extension. Step line is right at the 50% fib extension. Right below that's blue and climbing. Right below that is the 38 fib extension and the daily BBC. The green lines, called the BBC, stands for bull bear cross. When price crosses below the green line, we're bearish, we expect lower prices. Price crosses above the green line, we're bullish and expect higher prices. Lower prices, higher prices, lower, higher. That's pretty simple. Markets are fractal in nature, so the BBC can be applied to a daily chart, a weekly chart, a monthly chart, 30-minute chart, a 5-minute chart, a tick chart, and a range chart. Okay? And it's going to function the same. Price gets above the BBC, expect higher prices relative to whatever time frame you're looking at. Price gets below it, expect lower prices relative to whatever time frame you're looking at. Okay? Now, I encourage you, whether you trade futures or stocks or crypto or Forex or ETFs, spend 2 minutes with the daily chart of whatever market you're getting ready to trade on your smaller time frames. Institutional traders are the ones who actually move price because of their account size and the size they trade in. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It all has to do with account size. So what you're doing, if you make that part of your daily routine, is you're looking over the shoulder of the deep pockets that actually move price. Some days that can be very beneficial, okay? And it also lets you know when you've got a market looking for direction. Been down here, been up here, and now we're stuck right in the middle. That's a market looking for direction. Michael had a difficult time this morning, even in the live training room, because we had end markets, lack of follow through. Sometimes those days are better to not trade or get your goal, just bounce away. Okay. All right. All alerts, logic, and concierge are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose years ago. And if it's not broke, don't fix it. Don't try to fix it. There's nothing to fix. Now you can chase all kinds of different time frames. That's not going to get you anywhere. Because one day the 10-minute chart might look perfect, or 5-minute might look perfect, or the 1 minute, or whatever number you choose. But that consistency is not going to hold up. You have to become the constant integer. So that's why all alerts are created off a 30-minute chart. Pick the number, stuck with it. Okay? Nothing magic about 30 minutes in and of itself. As you can see, when price rallies up to a zone, a weekly trading zone, we expect resistance. When price drops to a weekly zone, we expect support. Support, resistance, and now for 2 days, we've just basically gone sideways. Now we're just off the new all-time historic high. Well, not just off, but the new all-time historic high came in last Thursday, 57.97.5. The day before was the Fed announcement. And although price did run up, this was a green candle all the way up. By the close of the session, everybody had dropped it, and we ended up with a red candle. Nobody thought that was going to happen. And that made Friday a pretty big surprise. Coming off a Fed day like that, where you get a half-point cut. You think it would go to the moon. There was a delayed reaction. Remember, Asia and the European markets had not had a chance to weigh in on the rate decision until 8 o'clock Thursday night. That's when the Asian markets open, and then 3 a.m. when the European markets open. And they set the trajectory for the day, but we did finish well off the high of the day. We closed at 74.5. The high was 97.5. Okay. So that is the new all-time high. We've redrawn the fibs to embrace the new all-time high. The low is still the low. That's never going to change. A leg, retracement, and a leg. Or you can break it down. Leg, retracement, leg, retracement, leg, retracement. You can see the pullback to the VBC holds more often than it doesn't, whether it's pulling from below or from above. But eventually it will trade through. And then when it retraces, pullback holds more often than not. And that's how price moves. Leg, retracement, leg, retracement. When price can go no lower, and it's going to start building legs to the upside. It can go no higher. It'll start building legs to the downside. And into the upside. And now, for 2 days, we're just treading water sideways. Probably have some kind of important economic news this week that will come out, give the markets a little jolt. For now, it's pretty quiet, pretty thin. So again, the vertical line here separates today, Monday. Back here's Friday. This is Thursday. Go back. Now, these are last week's zones because all the alerts that go out on Sunday night are based on the previous week's zones. The new zones don't come out till Monday morning at 6:15 a.m. Eastern. Once they're published Monday morning at 6:15 a.m. Eastern, they are carved in stone for the entire week. They don't change in any way whatsoever. Tomorrow, on this afternoon broadcast, you'll see this week's weekly zones. Because any alerts that go out after 6:15 a.m. Eastern, Monday morning, they're all based on the new zones. So we opened right here last night. It was 25 minutes into the life of this candle that the CTA targets were published. And we had no trouble running right up and hitting that target. Okay. We spiked it, got a little bit above it, rolled over. Once blue and climbing gets above price, that's potential resistance. Blue and climbing turns to red and falling, and it took us all the way down, almost to the short target. Short target would have been this low right here. Didn't quite make it. The low was 74 1/4, so we missed it by 1 1/4 points. Buyers came in early before we hit this support right here. Drove us back up to the VBC where we consolidated, and we hit the long target several times. Now we're back below the VBC, blue and climbing overhead directly above price, probably on its way to becoming red and falling. And so once price takes out these lows right here, you got a window of opportunity down to here. That low gets taken out, then you got a window of opportunity all the way down to here. That would be something like 57.51 to 57.46. 5 points. Only takes 2 points to get your goal for the day with the ES. The Dow, pretty much the same thing. Market open, BBC held. As you can see, we gapped higher on the open and came right back to the BBC, and the pullback held. And then it walked us right up to the target. At price, step line, blue and climbing. See. So we consolidate along that long target for a while till blue and climbing turns to red and falling, and that takes us below BBC. And again, 42,310 was the target. We made it down to 42,321. Okay. Buyers again stepping in early. This is almost identical to the ES. Hit the long target and hit the long target and hit the long target. But now we're back below the BBC, and notice blue and climbing is already turned to red and falling on the Dow. So once we take out these lows, then you got to deal with this low as potential support. So you're better off waiting to this area, about 42, call it 340. That gives you 30 points down to the target. Okay. All right, Russell. Here's where we opened. And we made that same run up, but we had to overcome the BBC. Consolidated for 2 candles, had a leg, a retracement, and a leg. Then blue and climbing rolled over, and it took us all the way down to the short target. We even spiked it. Spiked it to this area right here. Okay, see that? Okay, support will always send the market looking for resistance. Now we spiked the BBC, but we didn't quite get all the way back up to the high. The high was 68.10, so we were like 9 ticks off the target. But we definitely hit the short target. And again, and again. And now price is consolidating at the weekly trading zone. When price encounters a weekly trading zone, 70% of the time you're going to get this consolidation. 20% of the time you'll get rejection. 10% of the time, a slice. That's when price on the 30-minute chart slices through the zone like it's not even there. This is an example here. This is a very exaggerated example, but price sliced through that zone, and when it ran out of steam, it retraced all the way back to the zone it sliced through and continued in the direction of the slice. That's a very exaggerated view of how the slice works, but that's how it works. Does it happen every time? No. More often than not, yes. Okay, here's the open on the NQ last night. We go sideways for 3 30-minute candles. We find support at the BBC and blue and climbing. That walks us right up to the long target. Trade through the long target. Okay, till we get to this area right here. Resistance. Blue and climbing gets above price, turns to red and falling, and walks us all the way back down to the bottom of these two bodies. Okay, target was set off of the wick. People always ask, do you count the wicks? Well, of course, I do. I mean, price went there. Just because it got rejected, price still went there. So buyers came in early, drove us back up to the BBC. We tried to break above it and make another run to the upside, but again, price is below the BBC. Blue and climbing is about to turn to red and falling. And so opportunity is going to be on the downside. If you can wait to 19,991 down to 61, that'd be 30 points at $20 a point. That'd be $600 per contract traded. Crude oil. This is the open. Got higher on the open a little bit. Came down to the BBC, the pullback L. Got above red and falling. Red and falling turned to blue and climbing. And bang. Ran right up to the long target. Price consolidated at the target till blue and climbing got above price on its way to becoming red and falling. And that took us all the way down to the short target. See this right here? To the tick. That sent us support, always sends us looking for resistance. Resistance sends you looking for support. Back to resistance, back to support. Now in this move, we actually took out the high of Friday, the high of Thursday, and then the bottom fell out. And today's not crude inventory day. Over the last 1, 2, 3, 4, we're now in the 5th candle. We have 4 red candles in a row. The high of this candle was 71.75 to 69.75. That's this move here, that's over $2,000 per contract traded right there. Now it looks
I think
like
we'll be
buyers
seeing
are
that.
coming in. I'm sorry?
I said, wouldn't it be nice to be seeing something like that at the pumps soon?
Yeah, it'll take a while. All right, guys, we'll pick up with gold. Michael's going to give us a recap of what happened in the live training room. Then we'll do some trading on the TradingView platform, and then I'll come back. Like I say, I'll finish that recap, and then we'll wrap up with our good word for the day.
All right. Here we go.
All right, looks good.
Good. All right. Good morning, everyone. Today is Monday, the 23rd day of September, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on this purple button right here. There is no credit card required for our trial. All right. Just click on that purple button right there, and that's going to bring you to this registration page where all that we ask for is your name, your email, your phone number, 5 multiple choice questions. Then down here at the bottom, if you have NinjaTrader, give us your NinjaTrader machine ID. If you have TradingView, give us your TradingView login ID. Okay. Click the register button. Once you hit that, we'll know that you did all that, and we'll be able to enable your indicators for you. All right. So you get your indicators indicating before you start the trial. Now, the spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We had a day of it today. We did get the goal today early on, 3 minutes in one trade. We're up $900 contract, and we took a total of 17 trades. We took 16 more trades to go from $900 contract down to, well, $25. I'm $900 total, sorry, $100 a contract down to $25 a contract. It was a struggle today. It was a struggle. I missed some decent trades in the morning, but there was a lot of back and forth today. The markets just were undecided most of the morning. I guess looking at what Dwayne was just showing there, I should have been trading crude oil. Crude's probably got about, well, we'll look at crude and we'll see how that did. But anyway, we're plus 44 on the NQ, we're minus 20 on the Russell, minus 49 on the YM, and plus 12 on the ES. That plus 12 was right at the end. And it was actually on the trade that I'm not even sure it was a valid trade. Well, I'm sure it wasn't a valid trade when I think about it. but I did get the 12 ticks. Anyway, overall, we're at $13,715 over 15 trading days, averaging $914 per contract per 2-hour trading day. On the year, now we're at $83,515 with one contract. That's over 178 trading days, averaging $469 per contract per 2-hour trading day. Now, this number over here, I think it went up a little bit today. Yeah, 1 minute. Yeah, it went up a little bit today. If you were to quit trading when you get your goal for the day, following the 24/20 blueprint, the goal being $100 per contract, and you did that consecutively every day for a month, then you would be up a minimum of $2,000 per contract. You'd be able to add another contract. And if you did that month after month after month, right now we're in the 9th month, you'd be trading 9 contracts. And so far this year, you would have averaged $2,336 per hour. Okay. You would have worked a total of 53.8 hours, almost 54 hours, and averaged $2,336 per hour during those almost 54 hours. Now, that is if you started this year. Now, if you do the whole 24/20 blueprint, we finished that at the beginning of this month or at the end of last month, and working the same number of hours and same everything, we ended up averaging $7,104 per hour. And it doesn't change, does it? $7,104 per hour is what we ended up averaging. Yeah, that number does keep changing. I gotta find out why that number is changing. That's not right that number is changing right there, because we ended up averaging $7,521 per hour. Is what we ended up averaging at the end of the 20 month 24/20 blueprint. Yeah, this number should be not changing ever. I'll fix that. I'll fix it right now so I don't forget. We'll just copy that one and paste it there. Okay, well, let's get rid of the formula on that first. Get rid of the formula on that and then paste it there. Paste it there. That's still the wrong number. Anyway, I'll figure it out later. But that's the 24/20 blueprint. Let's get into the actual trades that we took today. Okay, on the YM, we had started out okay on the YM. No, we got one tick profit on the very first trade, and then we ended up with a break even on that grade trade right there. We stopped out on that one. That put us down to -24. And then we stopped out again on this one. I don't know how I made it. Oh, yeah, I do. That was right at the end. It only went 8 ticks into profit. 8 ticks into profit. And that was at the end where I saw that all the other markets did basically the same thing at this point in time. This is what all the other markets looked like. They all failed to put in a lower swing right here. I noticed it on the other markets while this one was happening. I noticed it on the other markets, and I was like, I think this is going to turn around and get us. And sure enough, it did. I could have taken the break even at any point in there. It would have been breaking the rules to do that, but I could have taken the break even or even locked in a tick, because at that point in the session, we were at break even in the session overall. You know, all the stop outs that we had, we managed to get it all back and get back to break even. But anyway, that one stopped us out, and we're at -49 after that stop out right there on the YM. We did not have another opportunity during the morning session, and these weekly trading zones being so close, they were causing issues all morning. You know, I wasn't able to take as many trades as I normally would because of that. The Russell had similar issues, the weekly trading zones being an issue. See right here, I took this trade, and I shouldn't have taken this one. This was a mistake in the beginning because it just was not enough room from here to the swing low to reasonably risk 25 ticks when it was probably only going to give me about 5. It did end up pulling all the way back up here, but this pull out of the overbought right here had to put it in the lower swing, which it failed to do. Then I took this trade over here, which stopped me out pretty quickly. So at that point, I was down. Oh, the first trade, I'm sorry, I'm missing the first trade, the very first trade. This is where we got our goal for today on the Russell, was right here. And I picked up 20 ticks on that. Now that had the strategy working, and the strategy clearly was not working properly, but I had it set for 25 ticks in profit. As the 25 bracket is what it was set for. It ended up giving me just 20 ticks in profit. And anyway, that's where we got the goal for the very first trade. Then we stopped out on this one. That put us at -5 on the Russell. And then we stopped out on this one. That put us at -30 on the Russell. Then we had a break even there. Then we had a +10 on this one. That got us to -20 on the Russell. And that's where we ended it. Now, as we approached the break, we had all this stuff in here, but we had to come off a lower swing. Remember what I said just a minute ago? This is what all the markets looks like. None of them had that lower swing in right there. And it turned around, and it did sort of give a trade right in here. It was too late. I didn't do any of that stuff. It gave one right here that put in a higher swing, gave another one right here that would have been enough to stop breaking. It gave another one right here that would have been some good profit. And then it went sideways. And that's pretty much been the market today. It's been a lot of sideways action in a lot of these markets. I do want to go look at the crude oil, and I'll do it on this market, on this chart, I think, in a few minutes here. Now, on the ES, we had nothing until over here. We took a break even on this trade, a break even on that trade. Then this trade right here, when it gave this down close right here, we didn't really have all 4 lines in the ribbon showing. And I was saying, I think it's going to pull back up to here. Okay, because it had done this, and we were looking for the 50% retracement up to there, and it did pull back up to there. Then it pushed down again. Remember, all the markets were not putting a lower swing right there. I noticed that on the YM. Then we took this trade right here, and that one didn't come out of the oversold. I thought it did come out of the oversold. I don't know why I thought it came out of the oversold, but I took that, and I got 12 ticks profit on that. And during the break, can do anything with this. You could take this one right here. For me, that probably would have been break even. It was this one right here you couldn't take. This one right here you could. Nice move down, another nice move down right there, and then a whole bunch of sideways action. One more nice move down right here, but depends where you got entered in at. Might have stopped you up to the tick before it can move down. There's nothing else you could do in there. There is one right now triggering though. Right at the moment, there's one triggering right here on the ES. Okay, from right here, right now, is a short. I just took it, and here it is. All right, it looks like it's trying to get right down to here, 57.62. Now, after 4 ticks in profit like that, we're going to bump our stop down to break even. And that looks like 61.50 is where it's trying to get down to. Okay, that's our first trade of this session, and we just got to break even on it. All right, it just took us out of break even. The NQ now, the NQ had the weekly trading zone issues that everything else had this morning, and a whole bunch of sideways stuff. So we started out right here on the NQ. We got our plus 8 ticks on that one. And then the next trade that we took was over here. We got a break even on that. Then we got 48 on that. That got us up to 56. Then we stopped out. That got us down to 20. Then we stopped out again. That got us to minus 16. Then we picked up 48 again, got us to plus 32. And then we picked up, looks like 12 right there. That got us up to 44. We had a break even, another break even, and then that was it, getting into the break. So during the break, there was this trade right here that went about 30 ticks. This one right here that went about 30 ticks. This one right here that went about 40 or 50 ticks. And turned around and went, this one right here would have been easy 50 ticks. Got really good all crunched up in here, got really sideways and crunched up. It looks like it just gave another trade there a few minutes ago from back here, all right? Which you could have, could be locking in some profit right now. You'd be looking for it to get down here below the prior swing low. Okay, that's what you should be looking for in that, below 20,018. And that was it. That was it for the YM. I'm not from the YM, from the NQ today. All right, so there were some really nice trades in there on the NQ. This ES trade that we took out, we just got a break even on. It should get down below the prior swing low. It should go right down to the weekly trading zone. That's what I would expect on it. All right. So if we go back here, for anybody that's logging on right now, that might be in YouTube logging on right now. If you haven't taken the free trial, go to mytradingq.com, click on the purple button right here. That's going to bring you to this registration page. Well, we ask for your name, your email, your phone number. Fill out just fill out the form. It takes like 30 seconds to fill out the form. These are all multiple choice questions. If you have an indicator, give us your machine ID. If you have TradingView, give us your login ID. All right. If you don't have TradingView, you should really go get TradingView. Okay. It's a really simple process. Just go and get it. All you have to do, go here to mytradingq.com. Click on the trading platforms right here. All right. Watch this little video about how to get TradingView. Okay. It's a 3-minute video. I should probably go look at it and make sure that it's still valid, but I'm almost certain that it is. It just takes you out to the page where the TradingView stuff is located, and you can just log onto it from there. All right, so that's that stuff. All right, so now let's go here. Trading platforms, this. All right. Well, now we need this needs to put in a lower swing. All right. This needs to put in a lower swing. This is changing directions. It needs to get into the oversold to do the same thing on the long side. And this is going to get away from the weekly trading zone. All right. I don't know if anybody's got any questions. It doesn't look like it here, but let me open up the YouTube page and see if anybody's got any questions out there. Give me just a moment. I will get that opened up. Why don't I use this one? Use this one, and here it is. All right. I do not see any questions. So now we're waiting for trades to set up. We almost have something here on the Russell. We have the weekly trading zone right there. That's going to be an issue. Possibly then become an issue. We do need to pull back. We got to get down into the oversold right here on the Russell. Okay, I don't know that that's going to happen. It's not right at the moment. Doesn't look like it's going to happen. here. Nothing there. Nothing there. All right. So we just don't have any trades right here. Not right at the moment. Let's go look at some other stuff. Now, Bitcoin. I started to look at this morning, then I started running out of time. Bitcoin had, well, it's got a lot of blue bars right here. Now, right up here is where I was saying I thought it was going to hit resistance right up in here, because it's hit it before here, and if you look all the way over here, hit it there before too. It looks like it's finding it again right now. This bar currently is a red bar. You see the outline is red right there around the paint bar. That means it's currently lower than where it opened. Now, we'll see what this ends up being here on Bitcoin, but this is on the daily chart. If we break this down to a smaller chart like this one, then, well, you can see that this is actually a pretty bearish looking pattern right here. It looks like it's going to give something up here by the end of the day, or by tomorrow, end of tomorrow. It looks like Bitcoin is probably going to give something up. Now that is Bitcoin. Now I wanted to look at another chart. Let me look out here to 6. All right, this is Mara. Now we've been watching Mara for a little while now. Mara doesn't look like it's going to give us anything terribly good right here. So I want to look at M. And I'll look at that on a 30 range, not a 30 minute. Okay, 30 range, XOM. There it is. Right. So the 30 range XOM at the open. Right in here. Let's take that off and put that on for a second. And see, today is the 23rd. So if we have that on and put the mid-trend trades on. Okay, did we get any opportunities yet today? No, we did not. Nothing yet today. Surprising. Okay, if we put that on there, I believe we're going to see something. Just one. That's surprising. Nothing right there. There should have been one right there. Put the aggressive on. There it is. All right. I was just looking because we had that big move up today on the X1, and I was thinking that at the beginning of the day, usually on the X1, at the beginning of the day, there's usually a decent trade that works out for $1 every day. I don't see anybody asking any questions in here. We don't have any trade set up, so I'm just going to keep looking at other stuff. Let's go over here and look at the ZB. Now, for those of you guys who are not familiar with the ZB, it's the 0 bonds, 30-year bonds. And I have it on a 3 range because it really doesn't usually have very much volatility during the day. You can see today it did because we did have some bond stuff came out today. If you look in the news, go here, economic calendar. So there was a little more volatility than normal today because we had right here 3-month and 6-month bill auctions were happening there at 11:30. What do we have for news tomorrow? Consumer confidence is the high impact news tomorrow. That's high impact news tomorrow, and Thursday is our next high impact news day. Interesting stuff. All right, Thursday and Friday, next high impact news days for us. Go back here. So it's 31, I think it's 31.25 a tick. This is, and starting this morning, there's some opportunities while I was in the pre-market. Finally at the beginning right there, it opened up, gave a little bit, and it pulled back. Gave another one right here, just a little bit, and then it pulled back. Markets just aren't giving much up today. See, normally it has pretty good opportunities in here. Today has been kind of an odd day. I wonder if they're still dealing with the fallout of the half-point bump last week. I would bet that's probably got something to do with it. I don't know anything big that happened in the news over the weekend. You weren't able to find the Friday trades. Can I demo how to get them? The Friday trades. Steven, did I not send you that video? Hang on. Can you send me something in Telegram? I'll just load it up onto your Telegram channel. The thing, if you have access to it in Telegram, I'm not exactly sure which one it is, but over here it's within one of these channels over here, Stephen, to get to the whole recording from Friday. Maybe this one. Yeah, live trading replay. That's it right there. So this is Friday mornings right here. Okay. It's that one right there, called LTR replay for Trading IQ members. And I know you are, so you should be able to get to that. Okay. And also, that's the whole morning on Friday. Also, if you send me a message, I have just the part. Well, I have about a half an hour of what I was doing trading on Friday. So you have that. And also, you can go here to Trade Rules. If you click on this right here, this is what I sent to you in an email on Friday. If you click on this, it will bring up a copy of my charts that I have running. And you can hit Q, for instance, and hit Alt and back and scroll back and keep scrolling and scrolling. You see the date down at the bottom. Still 23rd. There's 22nd yesterday and 20th. So what was Friday? Friday was the 20th. So all these trades that you see right here are from Friday. You see I have all my Friday trades right there. All those trades are from Friday. And they're all available to you and anybody that wants to go out there and get that. It'll be read only to you to begin with. All right, but I think you can still scroll back and look at everything. You can make your own copy of it if you want to. Again, to get to that, you just go here to mytradingiq.com, Trade Rules, click on Trade Rules, and it's this one right here, the 6JUNA, 6AR. Okay, that'll have all of today's and all of Fridays and all of the ones that I have saved before that, since the last time I cleared all the drawing objects. Okay, I haven't cleared the drawing objects yet this week, so they'll still have all that stuff in there for now. The recording, of course, will have everything, as long as we have those recordings available. All right, so we're still waiting. The closest thing we have to a trade is the Russell right here. See, the ribbon is spread. We're not in the oversold yet. We need a down close of this bar to get a trade there. That right now is the closest thing we have to a trade. If the NQ moves up some and then pulls back, we'll have a trade there. The S isn't likely to give us anything here in the next 10 minutes. The way the markets are right now. But yes, this is all Good. All right, so this is what I was talking about on the NQ. On a pullback, this is, I kind of wish it would stretch it out one more bar on the upside. But to get this into the oversold, this can take one, maybe 2 bars down close, and that might crunch up the ribbon. We'll have to wait and see what it looks like, how it all comes together. The Russell is the closest thing we have to a trade, but we need a down close of this bar before we have an up close. That will take it out of the oversold. Okay, that's all we have happening right now. These markets are painfully slow right now compared to what we're used to. You know, we could drop it all down to a smaller time frame, I suppose. This down to range, that might be a little more entertaining. Not really. Go back to the 19. Drop this down to a 7 range. You see, you're still not getting the trend. You get a little bit higher swing right there. You had pull out right here, pull out right there. Now that one didn't put in a higher swing, so you couldn't do that. You couldn't do that. But that did put in a higher swing, so you could have a trade coming up here on the YM on a much smaller time frame. And all right. Well, went right through the ribbon over here on this. So the ribbon is getting crunched up quite a bit. We also went through the ribbon on this. So none of this is working out the way we wanted it to. We've got a low here of 65.25, so you'd be looking at 67.25 possibly on an up close on the yes. It's still kind of weak. It really didn't put in a higher swing based on this one back here. Steven. That is not the one. No. It's down 1, 2, 3, 4 from the picture that you have. Okay, I'll show you again. Hang on. It is now this is what it looks like over here on the side. It's got this target thing. Looks like a target with a little arrow in the middle. That's what you're looking for. Okay. If I stretch this out, can't stretch it out. But anyway, that's what you're looking for in there. Okay, in the screenshot that you sent to me, you have the weekly trading zones one highlighted. It's 1, 2, 3, 4 down below that. The fourth one below that. All right, so the ES, I did have an order waiting here. I still have an order waiting there on the ES, but it's in the wrong place now. The low of this bar is down here at 64.75, so you're looking at 66.75, possibly for a long trade on an up close. This is really weak. Again, over here on the NQ, same thing. So it's going to be from 35.25 up to 43 and a quarter, something like that. Anyway, didn't come out of the oversold on that up close there on the NQ, so that's not a trade. The Russell didn't get into the oversold, so that's not an issue there. The ES is the only thing that's going to give us anything right here, it looks like. The Russell is going to, I mean, not the Russell, but the NQ is going to need an up close on this bar and an up close on the next bar. Actually, no, the up close on this bar should do it. Sorry, the up close on this bar should do it. That would be at 47.25. Right now is what you'd be buying on that, 47.25. And that turned into nothing. There's no trade there on the NQ. If the S closes down on this bar, there's going to be no trade here either. Okay, if the S closes down on that bar, there'll be no trade there either. We do need a down close here on the Russell. All right, we need a down close on the Russell before anything else. All right, could possibly get a trade here on the S. We only have about 3 minutes left, so if we do get the trade, I don't know that we'll be able to stay in it until we see what it does. Well, there it is. There's the trade on the ES. Now that just barely made it out. I'm not sure that did make it out of the oversold right there. Let's go over here and look. Let's put that on. Come over here and let's see. That would be, click on data window. Here it is. The snipe, 86.60 on this bar right here. What is it? 86.60. So no, it did not make it over 85. It's not really a valid trade there. I'm going to throw a stop at break even on that. Okay, it didn't make it out of the oversold, so it's not really a trade, but I'll take it. We'll take the break even on it anyway. We're not coming out of the oversold here, so that's not going to be anything there. We're not coming out of the oversold there, so it's not going to be anything there. And the ribbon's all crunched up here on the NQ. This is what the markets have been like today. They've just been tough to trade. Okay. This. All right. So, Stephen, were you able to find that? Get what you were looking for with that? Miles, did you make it into the morning session today? I remember seeing you there in the morning session. But again, I wasn't looking the whole time. So we're just waiting. Waiting, guys. This one needed to come out of the oversold and it didn't. Let's put this on a smaller time frame and see what we got going on. Let's go down to a 15. Let's go down to an 11 range. Or actually, it's on the Russells. Let's go down just to a 10 range. Go straight 10 range on this.
You have to register every Monday morning, Miles?
Yes. You have to, yeah. Every Monday morning you have to register. Everybody has to, every Monday morning. We get a new link is created every weekend. That's why this link here on the home page right here, that link is created Thursday night. And it's good. And it's good for the next week, really. From whenever I publish this page, usually on Thursday nights or Friday mornings, I publish this page. So just go out here right now. I'll go out here to mytradingIQ.com and click on that. Or I'll just, I sent you the stuff this morning, but I'll send it to you again. Okay.
And whenever you have that kind of a problem, just let us know in Telegram so that we can straighten it out for you right away instead of hours later.
Yes. We are as reactive as we can be. We're almost always available to react somehow, some way, shape, or form. We might not be able to get you all the information you want immediately when you ask, but we'll at least be able to tell you when we'll be able to get it to you. Yeah, if you register with the stuff that I sent to you this morning, Miles, then you'll be able to get in there for tomorrow. Okay, if you have any trouble with that, just email me or text me. You have my number. All right. Well, that's it, guys. We're gonna wrap it up. I looked at this really quick, the 10 range on this, just to see what it looked like on the 10 range, and there were a bunch of opportunities on the 10 range, right there, right there. There was one right there that would have stopped you out. They had to put in a lower swing to get another one, so you wouldn't have had another one in there, and then nothing until all the way over here. That worked out okay. Right here worked out okay. They had to put in a higher swing, so nothing else there. But this morning, from the 19 range, we had these trades. And if we would have dropped down to the 10 range because of the lack of volatility this morning, we probably would have had some decent trades in here. And we had decent trades as it was. On the Russell, we ended up negative, but we started out, we got the goal for the day on the very first trade on the Russell, which was right back here. Okay. There's some really nice trades here. Remember, you're just trying to get the goal for the day, not trying to trade 1,000 times a day. And if we would have quit when we got the goal for the day, we would have been done after 3 minutes this morning. Right. So let me say this. If you have not taken a free trial with us, go to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on that, and that will bring you to this registration page. Fill out this page. This is what you got to do, Mile. Every Monday. All right. Well, you'll get sent, if you joined, you'll get sent all the information you need every you don't get sent it, you actually get access. What you do is you get access to this channel right here. Get access to this channel.
You gotta go to telegram.org and get Telegram installed.
Yeah, you gotta install Telegram. Telegram.org. That should have been all sent to you in an email. Yep. I'm sure it was. It's all automated, so I'm sure it was all sent to you in an email. Go to telegram.org, and if you can't find that email, text me and let me know. All right. I'm pretty sure I have a copy of most of that information in that email somewhere that I can send off to you. All right. But this is where it gets put every Monday morning. Once you join, it gets put out here in Telegram every Monday morning with the weekly trading supplements. So you don't have to look for it in your email. All right. All right. So that is it. With that, guys, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. There is Dwayne.
Okay, recap of the morning session.
Today it took 3 minutes and 1 trade to get to $900.
Good job.
Thank you.
All right, guys, pick up where we left off. Yeah, go ahead.
I was just gonna say, Miles, if you have any questions, just text me. Okay, I have some time now that I can set stuff up with you if you need help. All right. All right, that's it. Now it's all yours, D.
Okay, so here's the open last night on gold. Remember, the vertical line separates today, Monday. Back here's Friday. These are last week's zones, because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So all the zones, all the alerts that go out on Sunday night are based on previous week's zones. Anything that goes out today after 6:15 a.m. Eastern is based on this week's zones. So 25 minutes into the life of this candle, that's when all the CTA targets were posted. We had red and falling over, we had blue and climbing overhead, red and falling, right on that candle, walked us right down to the BBC. Pullback holds more often than not, like that. Like that. Eventually it will trade through. First, it pulled back, hit the target, gave you your goal for the day. That candle opened at 45.5, and we'll just call it 46. 45.5. We'll just call it 46 to be conservative. So it's $500 per contract traded. in that 130-minute candle right there. Then we continued above it all the way up to 2655.8. That would be another $480 per contract traded. Top of the 500. Then we go sideways. When climbing gets on top of price, it's on its way to red and falling. So that takes us, again, pull back holes more often than not, but eventually it will trade through. Keeps markets real fluid and tradable. Okay. Then buyers came in early, right before we got to this low right here. Okay. Nobody wanted to get left behind. So buyers drove us back up to the BBC. We consolidated for a few hours. Red and falling turned to blue and climbing. One is bearish, the other is bullish. And off we go. Back up to the long target. And we take out the highs put in early on in the session. New all-time historic high. Now these are this is futures prices. So spot gold is a different thing, but pretty close. So you hit resistance. Gotta go look for support. So price is now pulled back to the BBC. And it's found support. It's got red and falling overhead. So the question now is the pullback going to hold and give us another leg to the upside? Get a leg, a retracement, leg, a retracement. We didn't get much of a leg. We failed to put in a higher high here. So trend may be over. If so, we'll trade through the BBC. Right here is your first spot for potential support, right where the bullish cross happened. Okay. 26.40, 26.49. Okay. Need to get below that. Need to get below that. Need to get below that. Down here, 26.35. It's $500 per contract traded. Down to the short target. You gotta be patient and let price get down here, if that's what price is going to do. Ultimately, price may hold. Okay. You'll know if it does, because it'll get above red and falling. Chances are we'll just consolidate sideways here for a bit. Red and falling will come down just like this. All right, silver. Here's where we opened last night, right at the weekly zone, and we just consolidated. We did pop down here and hit the short. You only need 2 pennies in silver. Get your goal for the day. Then some more sideways consolidation, and then a drop, and then a drop all the way to weekly zone. Spiked it, bounced. Second time, we got through it. And then right here, remember this is Monday, this is Friday, this is Thursday. Okay. Look over here. This bullish cross. Okay. We have a bullish cross that leads to an extended move. First time price revisits that area. Will almost always be good support. And it was. Some price, along with blue and climbing, back through the BBC. And then this area that was support earlier, as price dropped to the short target, that same area became resistance. So now we're back below the BBC. We got red and falling overhead. So what should we be anticipating from here? At the moment, lower prices. Why? Because price is below BBC, but it is spreading a green candle. Okay, but that candle's still got 20 minutes left in it. Again, you only need 2 pennies. Euro, sideways, and then a drop. Hit the zone, spiked it, bounced. Next zone, spiked it. Hit the next zone, it finally held. We spiked it, but it finally held. Support will send the market looking for resistance, which it found here briefly. Then up to the BBC. And then all of this. Balloon climbings are already curling over to red and falling. So be very careful on the long side. Because if this, remember, we're below the BBC. So we anticipate lower prices, but we got a zone, even though it's last week's zone right below us. See how the previous 30-minute, three 30-minute candles, basically all these candles across here. This zone from last week held a support. So just be patient and see. Let the opportunity open up. On the daily chart, again, Thursday was the new all-time historic high at 57.97.5. Today's high so far is 84.5. Okay, but we are off the high of the day. Currently, it's 50.70.75. So hopefully this won't be a whole week. I wrote last night in the discussion group that the potential for this to be a week of some very low volatility was certainly possible. And, well, we're only day one into it, but that's kind of what I was afraid of. Not afraid of, but thinking of. Just whether the market's moving higher or lower, there's trade opportunities. But when it's looking for direction, you don't have a good follow through, and that makes things a lot more difficult. There's nothing you can do to change this. Okay? Sometimes the best thing you can do is take a walk, sandwich, play with the dog, come back in an hour, 2 hours. Has things changed? If not, call it a day. Come back tomorrow. We will snap out of this. How long will it take? Only time will tell. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. Once you become a member, you'll get 2 hours of live interactive training and live markets every trading day. Plus, private one-on-one mentoring, strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. As a passport holder, you get the Logic 247 alerts, the concierge trade alerts, weekly trading zones every Monday morning, 6:15 a.m. Eastern, and you're able to attend the members-only workshop every Thursday night, 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. True story. That's my story. I'm sticking to it. All right, good word for the day. Friday I had to cut out early. And it was supposed to be part 2 of rebuilding your marriage. So now today is part 2. Part 1 was Thursday. If you missed it, if you need it, it's there for you. youtube.com/CFRN. Over 2,600 daily episodes archived for your educational and viewing pleasure. Plus, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can see how we've evolved over the years. Scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. watch a little bit, jump to another day, week, month, year. It's all there, all archived. youtube.com/CFRN. All right, Ephesians 5:25. Husbands, love your wives as Christ loved the church. Okay, second thing you got to do. Talked about the first thing on Thursday. The second thing is you must listen to each other. This requires time, patience, and focused attention. Too many couples give each other a monologue without leaving room for genuine dialogue. This is where marriage counseling is effective. It forces both of you to slow down, interpret your spouse's language, understand their feelings, and discover their needs. When a marriage breaks down, couples are often so busy trying to get their own point across and win the fight that they don't listen for solutions and places of negotiation. It's also the point where you've probably already forgotten what it was you started fighting about. Divorce would be less common if we would listen with open hearts rather than closed minds. Jesus pointed out that the law of Moses permitted divorce because of the hardness of your hearts. Matthew 19:8. This means their hearts would not melt to the level of understanding and place of negotiation for the relationship to work. Some couples find it simpler to write each other's letters, revealing their feelings as they relearn how to communicate at a deeper level. Counselors and marriage enrichment seminars use this technique, and sometimes it works wonders. By putting your feelings down on paper before expressing them, you get to ask yourself, is this how I really feel? Is this how I want to express my feelings? Am I saying too much or too little? Unloading on your mate may be a catharsis for you, but what if it buries them? These are some of the questions you must ask in order to rebuild your marriage. And if you both pray and keep your hearts open, God will help you do it. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.